The 10-year is shooting up like a rocket ship, and it's really important to know where it may head next. This is irregardless of whether you actually trade bonds and bond markets directly, or you're just paying attention to your mortgage rate. Because guys, the 10-year of the US Treasury, that is the proxy, that is the underlying basis for most of how our interest rates move. Now, if you're new here, I'm Hema Reddy, and I use price action here in candlesticks, momentum with my RSI power zones down below, and market timing in the form of forecasting to boost my trading and that of my tribes. So let's take a look at this particular chart. So this $ TNX.X, that is based on 10 times the yield to maturity on the most recently auctioned 10-year note, all right? So this is 10 times the actual rate. So for example, for 7.35, well, you just divide that by 10 to get the 10-year rate of 4.735. Got it? All right. I've already plotted doing some top-down analysis, so going from higher time frame to lower time frame, some key levels to watch on the 10-year. So this is the monthly chart, every candlestick representing 1 month of price action. And let's take a look. Now remember, this is moving opposite to the bond chart. So if I use the word resistance here, I mean resistance to the chart, because really resistance applies to the underlying futures, right? So here on the chart resistance levels, we're looking back at a range from 2007, the summer of 2007, and I want you to look at these three levels above: 48.74, 50.95, and 53.16. This is in conjunction with the RSI power zones, my favorite momentum indicator, starting to turn higher after putting in a low back in April. All right, so this is based on a monthly chart. Let's take this same chart time frame and shift it to a weekly chart. So now we're going to see more detail, right? We're going to see more candlesticks unfold and more detail in the RSI power zones, which has again been lifting up since April. That didn't change. So now you can see even more up close those three levels that I pointed out. So we're getting pretty close to the resistance level at 48.74. That could provide a temporary price ceiling on this chart of the TNX.X. If it doesn't though, the next step is the 50.95. And I think it's actually more likely that we're going to get to that 50.95 before there's a significant pause. Why? Well, one clue is the RSI power zones here. There's still room for them to push into the bull resistance power zone. Now, if you are new to my videos or you haven't dug into any of your momentum indication yet, then I have a book that details this indicator and introduces you to it. So you want to check that out in the comments below. All right, looking at the price action, the other thing I see here is that we are in what's called a drive higher, a new directional move higher since September 1st. And that doesn't seem to be having any end yet on the weekly chart. Now let's take it down to a daily where we can get more granular and see more detail. All right, so here's the daily chart of the 10-year, still with those three levels up above. Now I'm going to go and pause the video and do a forecast for this market to see when the next key timing point might be, and then I'll share that with you. All right, so here it is, the forecast. This forecast was for the 10-year to trade up into 45.79, that's this horizontal purple line, and to do so by October 16th. So you can see it's already exceeded that. It hit the target and then some starting September 27th. So when there's an overshot target, there's a lot of nuance to what can unfold from there. And I get into those detailed teachings in the loss forecasting trading system. But I can tell you here that this means that the cycle that was measured, well, the 10-year is actually stronger than that cycle projected. So overall, I think that the time aspect of this forecast becomes a little less significant. It looks like there's room for us to continue higher towards that 48.74 and even into 50.95 over the next couple of weeks. In the meantime, know that this still lies as a magnet out here, this intersection between this price and time. So if there's a correction lower, that could be what is pulling on the action. So there you have it, a multi-time frame analysis of the 10-year. Room to move higher, so long as we're staying above this low from September 29th, but the magnetic attraction of the forecast potentially creating some choppiness and moves lower ahead of a journey into that 5% range on the 10-year. All right, if you appreciated this insight into the 10-year using my trifecta skill set here, go ahead and give this video a like. If you want to keep staying on top of when videos like this come out, be sure to punch that subscribe button, and I'll catch you next time.